This week's 1044 is brought to you by Chevron Delos 600 ADF Ultra Low Ash Diesel Engine Oil. It's time to kick some ash.
How is the commercial vehicle insurance industry going to handle under 21 pilot program truck drivers?
Hey everybody, and welcome back to the 1044, a weekly webisode from the editors here at CCJ. I'm Jason Cannon, and as always, my co-host on the other side is Matt Cole. The Federal Motor Carrier Safety Administration is in the process of launching its pilot apprenticeship program for what will allow under 21 CDL holders to drive across state lines. The agency established its Safe Driver Apprenticeship pilot program with a federal register notice in January. The program will require participating drivers under the age of 21 to undergo two separate probationary periods totaling 480 hours of on-duty time, while also requiring a number of safeguards to be put in place by the fleets.
Despite FMCSA's efforts to ensure the drivers participating in the program are as safe as possible, ensuring these drivers could still be a challenge. We spoke with Shuie Yankelewitz with the Central Analysis Bureau, well known for its cab reports on motor carriers, who provided insight on how some of CAB's insurance provider customers view FMCSA's upcoming pilot program.
CAB's been around since 1939, well before my times. Started out in alignment with the commercial auto insurance industry, providing for the first 65 years or so a service of providing supplemental information to help assess motor carrier risk, specifically as it relates to the financial analysis. There's a direct correlation between the financial analysis of a motor carrier and the safety performance for obvious reasons. You don't have money, you're gonna cut corners somewhere. That financial analysis was pretty much what CAB was doing for the first 65 years of its existence. When I joined CAB, we were given an opportunity to start finding ways to make other data sources more useful and studying them to get data points and analytics that could possibly help insurers. We used our existing relationship with the insurance industry to start building in conjunction with them, in partnership with them, slowly releasing data points and metrics and getting feedback of what was predictive and what wasn't, and then slowly but surely developing into what CAB is today. Much less, we still do the financial analysis, but it's only a tiny little part of what we do. The primary focus of CAB is all about the data and analytics that help insurance companies assess risk, all different lines of coverage. And it's not just for underwriting purposes, but it's across the board. It's for claims adjustment. It's for pricing, for modeling, and it can even be for business intelligence purposes to really look at the markets, market penetration, understanding just what's going on. So we do a full service assessment or a full service service of of the data analytics for the insurance industry.
One of the biggest factors insurers consider when writing a commercial auto policy is experience. Without much truck driving experience, it's already difficult to get younger drivers insured.
One of the most important things that relate to risk is not necessarily the age, but more the experience. Ultimately, you can't buy experience. Experience only comes with experience. It's really literally, by definition of the word, the only way to get it. You can have a 40-year-old who just starts driving a truck, doesn't make him any better of a driver than a 24-year-old who's been driving for 3 years. In fact, he's probably not better. So really, insurance companies are very focused on the experience factor as it relates. I would say that that's more of a concern specifically than the age of, or I should say the young age of a driver specifically. The older you get, there's also risk factors, just from a reactionary standpoint. So young, very young, very old are both risk factors.
While FMCSA is exploring allowing under 21 operators to drive interstate, most states have allowed under 21 drivers within state lines for years. Shuie says that for insurance companies, the risk of these drivers, regardless of being intrastate or interstate, largely comes down to where they operate. But before we get to that, let's hear from 1044 sponsor, Chevron Lubricants.
Protecting your diesel engine and its after-treatment system has traditionally been a double-edged sword. The same engine oil that is so essential to protecting your engine's internal parts is also responsible for 90% of the ash that is clogging up your DPF and upping your fuel and maintenance costs. Outdated industry thinking still sees a trade-off between engine and emission system protection, and Chevron was tired of it. So they spent a decade of R&D developing a no-compromise formulation. Chevron Lubricants developed a new ultra-low ash diesel engine oil that is specifically designed to combat DPF ash clogging. Dello 600 ADF with OmniMax technology cuts sulfate ash by a whopping 60%, which reduces the rate of DPF clogging and extends DPF service life by 2.5 times. And just think what you can do with all the MPGs you're going to add from cutting your number of regens. But Dello 600 ADF isn't just about aftertreatment. It provides complete protection, extending drain intervals by preventing oil breakdown. Before you had to choose between protecting your engine or your aftertreatment system, and now you don't. 600 ADF from Dello with OmniMax technology, it's time to kick some ash.
When it comes to insurance, insurance is all about the risk and the exposure and the ultimate liability that can the potential for the liability to turn into a payout. So what that means is that insurance companies are more, for them, it's all about what is the chance that if I take on this risk, I'm going to have to pay a claim, right? And there's all different kinds of lines of insurance. It's not just people say insurance. There's so many different lines of insurance that we work with, different insurance companies that we work with. Different, you have workers' comp is different than auto liability, is different than inland marine cargo, is different than physical damage. So there's all different lines of insurance, and each one is going to have their own risk factors that play into the likelihood of the age contributing to the risk. There's also one of the components that plays into risk is the nature of the job. So if you're staying local, if you're an interstate driver, it's lower risk than a long haul, someone who's going long haul. And that's not even a 100% true statement either, because it depends where you're local. If you're local in New York City, it might be a lot more dangerous than driving across country straight down one of the interstates. So insurance is complex. Insurance is all about the data. And that's one of the reasons why there's an opportunity for CAB to help the industry, is because we take at least one of the data components and help make it as usable as possible. But the age plays a role where it's a risk factor. Their age is not in and of itself a risk factor. The age plays a role in the pricing if an insurance company determines that because of the age, there's the likelihood that they're going to have to pay a claim. So it's very important to frame the questions and the answers as it relates to insurance premiums, to understand that ultimately that's what insurance companies care about. They care about the likelihood of them paying a claim because of this as a risk factor, which means that if the states allow them to be driving, and it's not a pilot program, it means that the states have already determined that there's a certain degree of safety with allowing them on the roads. That in and of itself reduces one of the risk factors of a claim, because the nature of a claim can go up significantly if this driver, let's just for argument's sake, forget about the age of the driver. If you're talking about a driver, someone driving a semi, and he doesn't have a CDL, right? Just because he knows how to drive a car doesn't make him qualified to be driving. That doesn't matter if he's driving across country, doesn't matter if driving down the block. That's a major risk factor, right? Because the guy doesn't know how to drive. But if the governments don't allow these types of things to really necessarily go into play until they believe that their roads are not going to be adversely at risk, that reduces the risk of a massive catastrophic nuclear type of verdict. So, there's definitely going to be an increased cost. I know I just took my son to get a permit a couple of weeks ago. Okay, my son's 17 years old. I took him to get a permit, and someone told me just letting you know, as soon as he gets his license, just watch what happens to insurance premiums. He didn't do anything wrong, right? It's just that he's got no experience. He's a young driver. Now, there's always going to be some sort of a liability associated with the age, and the fact that the age of a new driver, puts them in a certain threshold and a certain risk category. But remember, when it comes to commercial auto, there are so many other risk factors at play. So it plays a role. It will continue to play a role, but it's not as big of a role as you might think.
Part of the concern for insurance companies Shuie spoke with about the apprenticeship program is that it's a pilot program, so the safety factors are unproven.
I actually had a couple of conversations with some of my friends in the industry, and I asked them this type of question directly. What are your thoughts? One of them came back and he's like, "There's no benefit to us. Why would we write it? We don't." So the only reason I could see writing it, this is his response to me, is if this was a motor carrier that we want to write, and as part of their big fleet, they happen to have just taken a driver, we'd have to consider it. And as he said, there's no question that because it's not in our appetite, we don't want to write it. It's not ideal for us. Because it's not in our appetite, we're going to charge much more money for it. That's the bottom line. One of the other companies that I spoke to said that without 6 months experience driving, yes, it doesn't matter if you're under 21, doesn't matter if you're over 21, they're not going to really want to see a driver without 6 months experience on the road. But the issue that comes in when you're under 21 is that you're now part of a pilot program. Being part of a pilot program is in and of itself a risk factor. What does that mean? It's in and of itself a risk factor. It means that under 21, the government is saying that we're having a pilot program to test the waters, see what it's like. That's not very reassuring, right? Does that mean that it's going to work out? It means it's not going to work out. It means that, there's a driver shortage. We want to try to maximize. You have these drivers that maybe have military experience. They have some sort of experience out there. We want to try to get them in. Let's get them on the truck so that we can ease the pain of the supply chain. But the problem is it's still a pilot program. So there has to be an incentive for an insurance company to want to take on that risk. When I was talking to one of them, one of my friends, he said the likelihood of a motor carrier actually starting up, meaning the likelihood of a 19 or 20-year-old starting his own trucking company is basically zero. The reason being that no matter what, he doesn't see it even possible that they would charge anything less than 2.5 times the standard rates. Just because of the risk. So now you're not going to have a 20-year-old coming in saying, hey, I want to start a trucking company, go ahead and get a truck, and suddenly have to pay 2.5 times the regular rates of insurance, which are already extremely expensive. Right? So it's unlikely to near impossible that someone's going to want to go down that road. It's just not going to be profitable. So what you're going to see is that the likelihood of the motor carriers that are going to be willing to go down this road are the mega trucking companies.
Shuie says that the trucking companies that will most likely be able to participate in the program will be those that are self-insured up to a certain amount.
These types of trucking companies have their own self-insured retentions. They have, they're self-insured. They're going to be paying the lower level claims. But that sort of creates a self-fulfilling data feeding process, which means that they're going to hire these drivers. They may send them out, slowly, give them a little exposure, experience the training, which they can do because they have the resources to do that. And then if there's some sort of claim, they're going to pay the claim and they're going to have the claims data. It's not really going to bubble out into the insurance loss runs stratosphere because they keep it all in-house. So that means that it's almost inevitably going to stay in-house because they're not going to have access. The bigger insurance companies are not going to have access to this data, which means that they're going to almost always have to price at rates that are too high, which is just going to further create that cycle where no one's going to want to hire these guys because they can't afford the insurance. You're going to have, let's say, somebody who has 5 trucks and he's going to take on a young driver because he's so desperate for a driver, right? He's going to have to now figure out, what is the offset cost of the added insurance premiums? Is that really bringing in that much more business for me?
In the event that a pilot program driver is involved in a crash, plaintiff attorneys will likely lean into the reptilian theory that's often used to score the so-called nuclear verdicts.
A pilot program, it could have what makes a nuclear verdict is the optics. Okay, reptilian theory, it's all about playing to the mind. It's all about the optics, right? How do you do it? The guy was a villain. He was an absolute villain. I mean, this guy was driving over hours. He has a record of speeding and he was driving past his hours of service and he went across the median strip and tragically killed, a handful of people and just the baby survived. I mean, the story is horrific. They truly are. And nobody focuses on the fact of whether or not it really makes a difference that he was driving over hours. Nobody's focusing on the fact that his past speeding doesn't have anything to do with what he was doing today. It's terrible optics. It's terrible optics. And the plaintiff's attorneys are able to play that so well, which is really catastrophic to the industry because it offsets the ability for these insurance companies to lower their rates because they have to be worried about these nuclear verdicts. A pilot program in and of itself can have terrible optics because he's going to just, again, blow it up and say pilot program, right? It has a flavor of unproven safety. I don't know if it's a good idea. And because it has that flavor of unproven safety, the bad optics associated with it can intrinsically be the downfall of such a program for a regular insurance company. You're not going to see it in the small trucking companies. You're probably not going to see it in the mid-sized trucking companies, which means that it's going to go to the large ones, and it's going to go to the large ones. The large ones are going to be the ones dealing with it anyway, not the insurers.
And that's it for this week's 1044. You can read more on ccjdigital.com, and as always, you can find the 1044 each week on CCJ's YouTube channel. And if you've got questions, comments, criticisms, or feedback, please hit us up at 1044trucking@gmail.com or give us a call, 404-491-1380. Until next week, everybody stay safe.